Welcome back to my channel, Mark My Finance, where we talk about the latest in personal finance. Friends, today most of us are running against a clock. We are growing older with life expectancy going up. The amount we want for our families in terms of lifestyle, we are working hard. And during this, many of us are burning out. We are getting diseases, and some of us are losing the ability to provide for our family because we just don't plan enough. I am Mark Sequera, and I am a certified mutual fund advisor and an IRDA certified insurance advisor, and I have done my MBA from Toronto, Canada, and I am an engineer. So I will pin my credentials and give you my website so y'all can check it out, and if you need my services, you do reach out. So the topic of today's video is why should I buy term insurance? So friends, term insurance is nothing but a financial shield for your family. Now, most of us watching, can you just pause and tell me 3 people, if something happens to you today, who will come and take care of your family the way you would have taken care of your family? The answer is most of us, we don't have that. So continue watching this video, and this is term. It is a wonderful product and everybody should have it. But many don't know about it, and so they don't land up buying the adequate term cover. You are an income generating machine to your family. If something happens to you, the bond between that income and your family is broken. The lifestyle that we would have enjoyed today for our family, if we are not around, tomorrow EMIs, home loans, motor vehicle loans, education of our children, healthcare costs of our parents, in-laws, all come into problem. And that is why you need to consider buying a good term insurance policy. So if you look out, I'm going to show you why buying a good term makes sense. This bridge, if something happens to you, this very bridge, the term insurance comes in, the money comes to your family, and that same lifestyle continues as if you were around. I'm going to place each of us into 4 quadrants. The high need quadrant, that is parents, people with parents who are supporting young children and aging parents. So if you are somebody who is supporting young children and you have aging parents without a massive debt, you are in high need quadrant. But most of us are in a critical quadrant, that is the critical need quadrant, that is primary earners with children with aging parents, and we have loans, home loans, personal loans, car loans, travel loans, all this kind of debt. And for this quadrant, term insurance is non-negotiable. Then there's a low need quadrant, that is people who don't have this dependencies, they don't take care of anybody, they are unmarried and they don't need cover, but they have massive wealth. And then is the high quadrant, co-signers or individuals heavily leveraged with personal loans. This is the high need quadrant. So you need to pause here and understand which quadrant you fall in. If you fall in this quadrant and you don't have term cover, you are at risk. Now there comes the golden reason. Can I tell you something? Imagine if you could freeze time. That means, is there any transaction on earth? You buy motor insurance, you buy travel insurance, you go for a movie, whatever you pay today. Can you tell me one transaction where the price is frozen? Term insurance is the only product where price is frozen. So if you are a 25-year-old buying a term cover today at 8,000 rupees, you will pay 8,000 for the rest of your life. And if you delay buying today, at 35 you will pay 15,000. Trust me, the younger you buy, the better for you. The same logic applies with mutual fund investing. The sooner you start, the better for you, the higher the COP is. This is what I was saying. 8,000 is the price for a 25-year-old. For a 35-year-old, it's 15,000. So what is the guidance value? Should I buy 5x, 10x, 20x? It depends on your income and your liabilities. So let us say I am earning 10 lakhs a year and I have an outstanding loan of 5 lakhs. The guidance value would be 15 lakhs into 10, 1.5 crores. So you need to decide. I would say a ballpark, everybody needs to understand how much they are eligible for, try and take the maximum. Mixing a term cover with investments, this is a very debatable topic, and I wouldn't want to get into it in this video, but it depends. Some people do not want to buy term, they want something where they get some kind of return, and it's a debatable topic. So there are plans where you can get investment plus high return. Choosing to buy online versus offline, again, I am a certified advisor. So if you want service and you want a good person to be able to bring in and manage the family when you're not around, you need to take that call. However, some of us do waive our fees on a case-to-case basis. The only metric that you should consider, one of the most important, is claim settlement ratio. Publicly available data, what is considered a good claim settlement ratio is for every 100 people who apply, what is the number of people who get the claim. Now trust me, you cannot blame the insurance company here only. You need to be also sure of how you are going about disclosing facts so that your policy doesn't get rejected. So the roadmap is, when you're buying the policy, be very honest to the insurance company. Tell them everything about your basic lifestyle. Tell them about your health conditions. Tell them about any other things that they need to know. Do not hide. Because tomorrow if it comes out that you had this condition, you're not going to get the claim. The policy is going to get cancelled and you're going to lose all your money. Set a target. Like I said, be greedy. Take how much ever you can get. Buy the right covers. The term insurance has a number of riders. It has a waiver of premium rider, personal accident rider, critical illness rider, early death rider. Understand these riders comprehensively and DM term. I would be happy, since I work with all companies, to help you out. Once you're finalized, collect all your documents and do an honest onboarding. Always saying, after COVID, the prices are always going to rise. So do not delay. If you're watching this video and think you will take action next Saturday, the day after that, that Saturday is never going to come. The term insurance rule. Calculate accurately. Reject any unwanted bundles. And when you're buying, buy right. So now I would like to take you to, I am a founder member of ICICI Prudential Life and one of the brand ambassadors. I consider myself honored to be working with ICICI Prudential Life, Bajaj Life, Tata Life and all these brands. And I am taking ICICI Life just out of an example. So you can see here, I have done a calculation for somebody who was born in 1980. A 1 crore covered until age 75. I have not added any riders. A regular price is just 31,000. How many of you spend far more money on a birthday party, on a holiday? Don't you have a responsibility towards your family? Close your eyes and think. Picture that. If you're not around tomorrow, who is going to come and take care of your loved ones? You have the limited pay option where you get a massive discount. I think if you take the option where you pay till 50 or 60, the discounts are good. Right here I can see it's a 50%, 34% discount if you take the limited pay option. And then you have the options which I would like to share. How can I take this money? So I can take the 1 crore as a lump sum. I can take it as a monthly income, whereby it comes to me. So many people have relatives, have nominees who cannot deal with so much of money. So they prefer that it comes as a monthly plan. And some of us can decide we want to have the 50 lakhs in lump sum. The rest you give me in a monthly mode. Friends, thank you for watching. And I'll be putting out more such videos on mutual funds, on investing, on general lifestyle advice. But what I want you to understand is that investing is not complicated. What is complicated is that we don't find the time to sit and review our portfolio, and we think that somebody else will do it for us. And then time catches up, and then you realized, my God, now I am absolutely helpless. This is Mark Sequeira from Mark My Finance. And like, share and subscribe and share this video with a friend who might need my help. Thank you for watching.